Hi everyone, welcome to my channel where I share tips and tricks on how to improve your finances and achieve your financial goals. In today's video, I'm going to share with you 10 budget planning tips for 2024 that will help you save more money, pay off debt, invest wisely, and plan ahead for a more comfortable financial future. If you're interested in learning more, make sure to subscribe to my channel and hit the like button. Let's get started. 1. Save at least 10% of your income for future goals, such as retirement, education, or buying a home. Saving is one of the most important habits you can develop to improve your financial health and security. Saving early and regularly can help you take advantage of compound interest and grow your wealth over time. You can use a savings calculator to estimate how much you can save with different interest rates and time periods. For example, if you save $200 a month at a 5% interest rate for 30 years, you will end up with over $200,000. That's a lot of money for your future. 2. Spend less than you earn and avoid living beyond your means. This is the golden rule of personal finance and the key to staying out of debt and building wealth. It means creating and sticking to a realistic budget that covers your essential expenses such as rent, food, utilities, and transportation, and leave some room for discretionary spending such as entertainment, hobbies, or travel. You can use a budget planner to track your income and expenses and see where you can save or spend more. For example, you can cut down on unnecessary subscriptions, eat out less, or use coupons and discounts to save money. 3. Pay off high-interest debt as soon as possible, especially credit card debt. Debt is one of the biggest obstacles to achieving your financial goals, as it can quickly accumulate and damage your credit score. The longer you carry debt, the more interest you pay, and the less money you have for other things. That's why you should pay off your debt as fast as you can, starting with the debt that has the highest interest rate, such as credit card debt. You can use a debt payoff calculator to see how much you can save by paying off your debt faster. For example, if you have $10,000 of credit card debt at a 20% interest rate and you pay $300 a month, it will take you over 4 years to pay it off and you will pay over $6,000 in interest. But if you pay $500 a month, you will pay it off in less than 2 years and save over $3,000 in interest. 4. Build an emergency fund that can cover at least 6 months of your living expenses in case of unexpected events, such as job loss, medical bills, or car repairs. An emergency fund is a safety net that can help you avoid or reduce the financial impact of unforeseen events and give you peace of mind and flexibility. You should keep your emergency fund in a separate, accessible account that earns some interest but does not charge fees or penalties for withdrawals. You can use an emergency fund calculator to determine how much you need to save for your emergency fund. For example, if your monthly expenses are $3,000, you should aim to save at least $18,000 for your emergency fund. 5. Invest in a diversified portfolio that matches your risk tolerance and time horizon. Investing is a way to grow your money faster than saving alone, but it also involves more risk and volatility. Investing means putting your money in different types of assets, such as stocks, bonds, and cash that have different levels of risk and return. The more risk you take, the higher the potential return, but also the higher the chance of losing money. The less risk you take, the lower the potential return, but also the lower the chance of losing money. You should invest in a mix of assets that matches your risk tolerance and time horizon, which are your personal preferences and goals. You can use an asset allocation calculator to find the optimal portfolio for your goals and preferences. For example, if you are young and have a long time horizon and a high risk tolerance, you can invest more in stocks, which have higher returns but also higher volatility. If you are older and have a short time horizon and a low risk tolerance, you can invest more in bonds, which have lower returns but also lower volatility. 6. Maximize your tax-advantaged accounts, such as 401k, IRA, HSA, or 529 plans. These are accounts that offer various benefits, such as tax deductions, tax deferrals, or tax-free withdrawals that can help you save more for retirement, healthcare, or education. You should contribute as much as you can to these accounts, especially if you get an employer match, which is free money. You should also take advantage of any tax credits or deductions you are eligible for, such as the child tax credit, the earned income tax credit, or the student loan interest deduction. You can use a tax calculator to estimate your tax savings from these accounts and credits. 7. Track your net worth by calculating the difference between your assets and your liabilities. Your net worth is a measure of your financial health and progress over time. It represents how much money you would have if you sold everything you own and paid off everything you owe. You can calculate your net worth by adding up the value of your assets, such as your cash, savings, investments, property, and personal belongings, and subtracting the value of your liabilities, such as your debt, loans, and mortgages. You can use a net worth calculator to see your net worth and how it changes over time. For example, if your assets are worth $100,000 and your liabilities are worth $50,000, your net worth is $50,000. You can increase your net worth by saving more, investing wisely, paying off debt, and increasing your income. Tip 8. Review your credit report and score at least once a year and monitor them regularly for any errors or changes. Your credit report and score are records of your credit history and behavior, and they affect your ability to borrow money, get a mortgage, rent an apartment, or even get a job. Your credit report shows your personal information, credit accounts, payment. Learn more. 9. Protect yourself and your loved ones with adequate insurance coverage for your life, health, property, and liability. Insurance can help you avoid or reduce the financial impact of unforeseen events such as accidents, illnesses, lawsuits, or death. You should shop around for the best rates and coverage options for your life, health, property, and liability insurance, and review your policies regularly to make sure they meet your changing needs. You can use an insurance calculator to estimate how much insurance you need for different scenarios. 10. Educate yourself and seek professional advice when needed. Personal finance is a complex and dynamic field that requires constant learning and adaptation. You can improve your financial literacy by reading books, blogs, podcasts, or courses on various topics such as budgeting, investing, taxes, or retirement planning. You can also consult a qualified financial planner, accountant, or lawyer for specific questions or guidance. You can use a financial advisor matching tool to find the best advisor for your needs. I hope these tips help you plan your budget for 2024. If you have any questions or feedback, please let me know.